Hey traders, it's John Howe speaking, and in this quick video I want to address a question that I got from someone in my email box, and I've highlighted his name out so you can't see who he is, but I had a couple of questions and I thought this would be really good to actually do a recording here, and you might be able to find some use out of this. So the very first question he asked, I actually put up a live video, or a video of myself trading live, getting in, getting out, where my stop is, profit targets, stuff like that. And what actually happened was, he watched the video, but then he came back and he wanted to ask a few questions. So the very first question was here. Number one, towards the end of that trade, would you bring your stop closer to lock in at least a couple of points profit, rather than getting stopped out at break even? Okay, so basically what he's saying there is, instead of moving your stop to break even, and your trade's almost at your profit target, would you look to lock in at least a couple of points profit target, a couple of points profit if you're almost at your profit target. So, and I would say yes, absolutely, definitely yes. If you're going for, say, a 9-point profit, and you have a stop at break even, and your trade is now at 8 points. If you have your stop at break even, then I don't think you're using the money management and the trade management to the best of your ability. I think you should bring it in at least 1 or 2 points, yeah. Definitely let it swing, but when you're going for bigger points, bigger targets, you generally have to give it a lot more longer time frame. It's generally sometimes 6-7 hours, as you guys know. I've been in trades that long. And when that happens, it's going to swing against you, it's going to swing for you, it's going to swing against you, it's going to swing for you. Sometimes I've been in a trade where it's gone 4 or 5 points profit before it's gone 1-2 points against me, then back down to 4 points profit, then back to break even, then 6 points profit, then back to 4 points profit, and then slowly starts to step down. So when you're actually longer term trading, as in looking for bigger stops and bigger profit targets, that's the danger you take when you bring your stop in just too soon. But if you're getting closer to your profit target, your overall target, just say 9 points, and you're at 8 points, then definitely yes, bring your stop in to make sure you're protecting that trade, because I don't think it's very good I don't think it's been professional, so to speak, to actually not bring your stop in if you're almost at your target. Okay, using really good money management and trade management skills. But this is where it also comes on watching the market, watching the flow of the market, and getting in tune with the market as well. If the market's really choppy, going up and down, but you're pretty confident it's going to follow through, well then by using your judgment there, by watching the market, you might want to keep your stop back a little bit. But if the market's nicely stair-stepping, well then you might want to bring your stop down as it stair-steps. Okay, again, just use your judgment there. Okay, and also actually I'll reveal his name. His name's Clayton. Okay, his name's Clayton, and Clayton, you know who you are. And his second question was, how tempted do you get to bringing your stop in within a quarter of a point to a point or so of your profit target? Now, I'm pretty sure he's saying, my profit target's 9 points, but would you bring your exit stop level down maybe 1 point or 1 1/4 points or so on and so forth? And the answer is, Clayton, yes, I do actually get tempted to do that. And yes, I do that sometimes. Okay, sometimes I'm looking for 5 to 7 points. When I say 5 to 7 points, that's the range where I'm expecting to get out. The last video I said I'm looking for 5 to 7 points, but what did I do? I got out at a 7-point target. The reason why is because I was watching the market, I was in tune with the market, and I was confident that the market was like to follow through and actually give me my 7 points profit, which it actually did with that trade. But there are some times you're just watching the market and seeing the way the market's flowing, seeing the way the market's moving. And this is what happens when you watch the market so many times and so much, you start to get in tune with the market. You start to feel what it likes and what it doesn't like, and what to do when it doesn't like it, and what not to do when it's doing something you know that it's not likely to do. As in, if it makes a high peak, high trough, you know it's not likely to go down, so you're not going to go short. As a general example there. Okay, so the more you watch a market, a stock, an index, doesn't matter, a future, the more you get used to the way that actual market works, and the better you become as a trader. You might get knocked down for a year, 2 years, 3 years, but if you keep going, you're going to learn those lessons, you're going to step up. Okay, so there are the answers to those two questions. just make sure that you have a precise plan when you get in and when you get out. Now, sometimes that plan's going to change if an announcement comes out and things spike or something like that. Like, for example, today I got into a trade. I got in. I actually almost got stopped. I had a 4-point stop, and it came within 1 point, almost 1 point of 1.5 points of stopping me out. He turned around, went straight back up to break even, and then we had a big news announcement. The thing spiked up, went sideways for a bit, and then spiked up again. I was at about a 4.25 point profit there, but because the market spiked up on the news announcement, sometimes it spikes on news announcements and then suddenly sells off. So when suddenly that happens and you're in a big downward movement, you think maybe it's time for me to get out now because of the situation. Okay, so sometimes it comes down to a judgment, decision on what you're doing, and also how in tune are you with that particular market itself. And that's why it's so important to trade and continue to trade and not give up. That's so critical and so important itself. Okay, so once again, yes, keep bringing your stop up to protect your profits, and as the trade moves on, yes, keep bringing your stop up. But don't, if you're looking for bigger profit targets, remember, don't bring it up too tight because you are going to get swings against you and for you, and eventually it should go down to where your target is. Have I had trades that gone 6 points profit, and then suddenly a 10-point loss? Dozens of times. Have I learned that? Yes. How? I simply bring in my stop now. So if I had a 6-point target, I literally halve my stop. So if I'm going for a 9-point profit and I had a 6-point profit, I'll bring my stop in like 3 or 4 points behind my break-even level. Okay? That's just come from experience. And generally speaking, try to have an area of a profit target, not just a finite level. Okay, so once it starts to get this level, I'm looking to take profit, but I'm not looking to jump out really quickly. Okay? Alright traders, that's it for me. I hope you enjoy your weekend. I hope you are enjoying your weekend because you're probably going to see this while you're on your weekend. And Clayton, I hope that helps. And anyone else, if you have any more questions, put it below on this blog post, and I'll do my best to help you out. Thanks, guys.